All right, we've got a fascinating story for you today. On one side, you have JLL, a 240-year-old real estate titan that just posted a record-breaking year. And on the other, well, the new potential threat on the horizon, artificial intelligence. This is a classic old guard versus new tech showdown.
So this really begs the big question, right? Is AI about to completely upend an industry that's been built on relationships and boots-on-the-ground expertise for centuries? Or is it just another tool? Well, JLL's latest earnings call gave us some really interesting clues about how they see things. So here's the whole story in a nutshell. The green, that's all the good stuff. We're talking record results, massive growth, and big-time shareholder returns. But the gray kind of hints at the but. A clear-eyed view of AI's potential, and, a few other minor bumps in the road. Okay, let's dive into the details here, because before we can even talk about the AI threat, you've got to understand just how strong JLL's position is right now. And frankly, their latest numbers are just wow. First off, just look at their top-line growth, almost 12% more revenue than the same time last year. And get this is their 7th quarter in a row of double-digit growth. That's not a fluke, that's sustained, powerful momentum. And it's not just that they're making more money, it's how much more. They didn't just meet Wall Street's expectations, they absolutely blew past them, beating the expert consensus by nearly $1.50 per share. That shows you a company that's firing on all cylinders, performing at a level nobody saw coming. And finally, profitability, a 22% jump in full-year adjusted EBITDA. So this isn't just about sales. It's about being a smarter, more efficient, and way more profitable business. JLL is walking into this new era with some serious financial muscle. So the big question is, where is all this growth actually coming from? Let's pop the hood and take a look at the two core parts of their business. JLL's business really boils down to two main engines. You've got your transactional revenue. That's the big money from closing huge deals, like office leases or selling entire buildings. Then you have what they call resilient revenue. That's the steady, predictable income from long-term contracts, like managing facilities. The secret to their success right now? Both engines are absolutely screaming. And here's just how strong that transactional engine is. In the fourth quarter, office leasing, up 26%. Investment sales, also up 26%. This isn't just one part of the business doing well. This is broad-based, explosive growth across the board. But, and this is a big but, even with these incredible results, the conversation on their earnings call kept circling back to one thing: the market's fear of AI and disruption. This is really the central conflict in JLL's story right now. And that specific fear? It's got a fancy name: disintermediation. It sounds complicated, but all it really means is cutting out the middleman. The worry is that some smart AI platform could one day just connect buyers and sellers directly, making that traditional real estate broker totally obsolete. So how does JLL answer that? Well, here's the CEO, Christian Ulbrich, tackling it head-on. He's basically saying, look, this isn't some new panic for us. We weren't caught by surprise. We've been planning for this tech shift for pretty much the last 10 years. Okay. So if they've been preparing for a decade, what's the actual plan? How exactly are they going to defend their business, their moat as they call it, against these new tech challengers? According to the CEO, their defense really rests on 3 pillars. First, scaled proprietary data. We're talking information from decades of deals that only they have. Second, unified platforms that let them use that data all over the world. And third, the best people. The experts who can take all that data and tech and actually get results for clients. Their argument is that AI, by itself, just can't replicate that whole package. And this quote right here, this was from the Q&A session, and it's about as direct and confident as you can possibly get. After laying out their entire strategy, the CEO basically says, yeah, we've looked, and honestly, we just don't see anything out there that's a real threat. That is a remarkably bold thing to say in this day and age. Now, talk is one thing, but is JLL actually backing up all this confidence with cold, hard cash? Let's look at their financial moves, because they speak way louder than words. And wow, just look at this. In 2025, they bought back over $212 million of their own stock. That's a 163% increase from the year before. Buying back your own stock is one of the biggest signals management can send that they truly believe their company is undervalued and has a bright future.
And they're not hitting the brakes. The company is projecting another 12% growth in profitability for next year and says it plans to buy back even more stock. They aren't just telling the market they're confident. They are showing them by doubling down and investing heavily in themselves.
Which kind of leaves us with this final thought. JLL is building its defense around data, platforms, and people. But in an industry where massive, high-stakes deals have been done on a handshake for centuries, you have to wonder, is their most powerful weapon against the AI boogeyman all their new tech? Or is it the one thing a startup could never replicate, a 240-year history of building trust? Definitely something to think about.